Good afternoon, all. Hope you are able to hear me.
Afternoon. You're on a bit.
So we have started a document splitting part. Any questions on, I think we have done active splitting, if I'm not wrong.
Yes, active splitting is done.
We have done with the scenario 1 and scenario 2.
Yes, two scenarios.
Yeah. Put a heading as in 0. So no questions, right, before I proceed?
No questions from my side.
Okay. Next one. Second one. Zero balance splitting. Zero balance splitting. Write down zero balance splitting. The zero balance splitting will trigger, write down. The zero balance splitting will trigger. The zero balance splitting will trigger where debit balance is not matching with credit balance, where debit balance is not matching with credit balance at business area level, profit center level, or segment level, comma, system will trigger zero balance clearing account. System will trigger zero balance clearing account to equalize debits and credits. To equalize debits and credits. Okay. So the zero balance splitting will be takes place whenever there is a difference between debit or credit at business area level or profit center level or segment level. Okay. So how it's going to be trigger, I'll show you with the different scenarios. You can write it as in scenario 1. I'll write it as an S1. Entry view. Okay. So at entry view, write it as a pages account. Wages account debited 50,000. Okay. Ours is Lahari only, right? LHYD. Next one, profit center L1000. To bank outgoing account. to bank outgoing account 50,000 LHYD L1100. Clear? So what is the problem here? What is the problem? Where the debit is not equals to credit? At which
Profit center.
profit center level? See here, debit profit center is L1000 and credit profit center is L1100. So here debit is not equals to credit. Here debit is equals to credit at business area level. But when it comes to profit center, debit is not equals to credit. Then how system will trigger in the sense? So here the GL view. GL view. We know that GL view, we have three ledgers. 0L ledger, XL ledger, YL ledger. And how many currencies? Three currencies: document currency, local currency, and hard currency. So how the entry will split in GL view? Okay, so it will be written, it will be taken as wages account debited 50,000 LHYD. So here debit is not equals to credit at profit center level. So it will take L1000. Okay. Here it will split. Here it will automatically pick to zero balance account to zero balance clearing account 50,000 LHYD. So here debit will automatically nullify with credit L1000, right? And again, it will be written as zero balance. So here credit is different. So it would like to nullify with debit entry. So zero balance clearing account debited, zero balance clearing account debited 50,000 LHYD L1100 to bank outgoing account. To bank outgoing account 50,000 LHYD L1100. So how it's going to take here? LHYD So here what it will be, profit center will be derived from L cement. So where debit is not equals to credit and credit is not equals to debit, then the zero balance will be automatically triggered. Just write it down this. Just write it down this entry. So here debit is not equals to credit, then automatically the adjustment entry will be written by the system itself, will be updated with this GL account. Zero balance clearing account will be get updated, right? It will be updated debit equals to credit with profit center L1000, L1000, and here credit will be adjusted with zero balance clearing account L. It's L only, right? Yeah, L1100, L1100. Clear?
Yeah, no.
So next one, we will see one more view, second scenario. So here we saw the profit center level, correct? Now we will see one more scenario, scenario 2. Entry view. Entry view. Salary account. Account debited. Salary account debited. For example, 25,000. LHYD. Corporate profit center L9000. 2. Salary payable account. $25,000. So here business area is different. L Guntur. And profit center is same. Clear? In earlier scenario 1, we saw profit centers are different. But here, what is different? Debit line, it is showing as an Hyderabad business area, and credit line, it is showing it as an Guntur business area. Clear? Any questions?
No.
So what would be the output? How system will reflect now in GL view? GL view. Same 3 ledgers. Again, we know that 0L, 0L ledger, XL, YL, and document currency, local currency, hard currency. Okay. So how it will be? Can anyone say how it will be adjusted? How it will be adjusted?
Salary account debit to zero balance clearing account.
But which level?
I didn't get Navin.
Which level means nothing but
For
business
Hyderabad.
business area level.
Yeah.
Correct?
LHYD. Yes.
Yeah.
For the
So,
both.
so this is the important thing. Salary account debited. Okay.
25,000.
25,000. 25,000. Okay.
LHYD.
LHYD. Okay. L9000. L9000. Okay. So here it will be written it as an 2 zero balance clearing account. 2 zero balance clearing account. 25,000. Here it will be LHYD. Instead of L Guntur, it is adjusting L9000. So it's a corporate segment. L corporate. L corporate. And here now the second one, salary payable account. So credit line. right? So here it will be zero balance. Zero balance clearing account debited 25,000. Okay, so L Guntur, L 9,000, L Corp, to salary payable account 25,000. So here L Guntur, L 9,000, L Corp. Okay, you know, right, how it is deriving now?
Yeah, Naveen.
Just write it down, these two scenarios.
Done, Naveen.
Any queries on this zero balance ledger account? So means what is zero balance splitting? Zero balance splitting is nothing but whenever there is a difference between debit and credit lines at a business area level, profit center level, or segment level, then automatically zero balance will be get triggered. Here, that splitting we call it as a zero balance splitting.
One question here.
Sorry.
One question from my side.
Okay.
So normally, in financial accounting side, if we see here,
Sorry.
in case this expenses is booked here in the Guntur side, right?
Okay.
But salary paid to the Hyderabad.
Correct.
expenses
See,
are,
for example, the salary belongs to Hyderabad account.
yeah.
Okay, but you are paying or you are supposed to payable, means that particular employee has worked in that particular month. See, we have a different business areas. One is a Hyderabad business area and one is Guntur business area. What employee has done is he belongs to Hyderabad business area, but due to some reasons, his services are required in Guntur business area.
Mhm.
Clear? At that particular point of time, the salary payable by the Guntur.
Mhm.
Clear? So here employee belongs to Hyderabad and the services are provided to Guntur business area. So at that particular point of time, debit is not equals to credit.
Okay, because of system configuration.
Correct.
Right? Okay.
Because he belongs to Hyderabad.
Yeah. So normally, whenever that particular employee name selected, we had Hyderabad business area profit center we selected, but actual payment done from the Guntur. That's the reason this difference is happening, right?
Exactly.
Okay, got it.
Any other questions? Any other questions?
No, Naveen.
Okay. So next one, write down passive splitting. So this is about your zero balance splitting. Next one, third one, passive splitting. Passive splitting. Write down. Passive splitting will work. Passive splitting will work based on dependency document, based on dependent document or dependency document, or reference document, based on dependency document or reference document. And that splitting is known as passive splitting. That splitting is known as passive splitting. See here. For example, first of all, I'll give you the definition and after that I'll explain the scenario. See, passive splitting in the sense, for example, I have posted one entry, same, a wages account, debited. It's not scenario. Don't write it, just giving example. Okay. 50,000. And business area, LHYD. And profit center, L1000. To cash account, 50,000. Okay. So LHYD, L1000. Clear? So this is the entry we have entered. But unfortunately, the entry what we entered was incorrect. After posting an entry, after some time within an hour or very next day, okay, we came to know that this entry is salaries account. This entry need to be debited with salaries account, not with wages account. So what we can do in Tally or any other accounting software, we can directly delete the voucher. If we are entered any voucher wrongly, then we can delete the voucher. But here what we can do in SAP, normally what we will do?
We need to post a contra entry
Reverse.
to clear. We need to post a contra entry to clear it.
Not contra, reversal.
Reversal.
Yeah.
Right? We need to do a reversal. For example, if it is not cleared, then so here the document number will be get generated. For example, I'll say document number is 119 lakhs. Okay, fiscal year is 2023. Okay, and company code is LI01. The document got posted in LI01 company code with the document number 19 lakhs, 19 series, and fiscal year 2023. So if I want to do reverse, so two things, either I can do credit memo, I can post credit memo, or what I can do what we call automatic reversal, right? So here I'll do FB08. For MM documents, we can do MR item, and here we can do FB08. What is FB08? So if it will ask FB08, it will ask to enter document number, and after that it will ask for company code. It will ask for company code, and it will ask for fiscal year. Is this clear, or is that correct? Yes or no? Majority people have done, right? Reversals.
Yeah, no. MR item and
MR item
FB0.
or FB08 works in the same way. Okay, it will ask for document number, company code, and fiscal year, if I'm not wrong, right? And we will give this document number, posted reference document number, and company code and fiscal year, correct? And if we post it, what happens? The entry will be reversed, correct? Yes or no?
Yeah, no.
So what would be the entry got posted? Cash account debited to
Wages account.
wages account, and it will take automatically pick the amount, automatically it will pick business area from this particular document number, right? So are we giving in FB08 amount, business area, GL accounts, all those stuff?
No.
No, system will
what are the
directly
things we are
post the
giving?
mirror entry.
Sorry,
System will directly post the mirror entry, opposite entry.
we are giving only the document number, that's it, correct?
Yes.
And the splitting is taking automatically, correct? And this type of splitting is known as a passive splitting. Means what is the dependency document here? The dependency document number is 19 series. We will give 19 series, whatever attributes are there, that will be taken from this particular document. Correct? Yes.
Yeah, no.
Right? That type of splitting, we call it as document splitting. Fine, everyone. Same thing, payment. When we are doing after posting a document, when we want to pay that document, right? Then just we will give the document number. That's it. And all the attributes will be taken from that document number only, correct? Vendor, amount, business area, profit center, segment, and everything will be taken from that document. Then that type of splitting, we are going to call it as a passive splitting. Is this clear? Yes, no, kindly respond, please.
Yeah,
Yes,
no,
sir.
clear.
One question I have.
Yes.
If we don't configure this passive splitting,
1 second, 1 second. Give me a second time. Sorry. Yeah, please.
yeah. So my question is, if we don't configure, for example, forget or something like that, then this reversal will get error, right? The end
Yes, yes.
get error. Okay.
Okay. Any questions here? Any questions here? Understood passive splitting? Yes, no.
Yes, no, can. Yeah.
Okay, we'll see scenario 1. S1. Scenario 1, entry view. Okay. So the entry is transportation account debit. Okay. Loading charges account. Loading charges account debit. Loading charges account. Loading charges account debit. Loading charges account debit. Input GST. Input GST at 6%. Input GST 6%. I'll take it later. This input GST. So I'm taking care it as an 1 lakh. Loading charges. Loading charges 50,000. Input GST. So 6%, 9,000. Input GST. 6%. So 9,000. So here I am taking cost center. So I'm taking here for just for everybody's understanding. I'm taking cost center. Cost center 1,000. Only cost center will be affected to expenditure accounts. Okay. CC 1100. To XYZ ABC or XYZ, I'll take XYZ Services Limited. XYZ Services Limited. Total 1,68,000. Okay. So here we have transportation charges account debited, loading charges account debited, input GST is this is also input GST 6%, input CGST, SGST or whatever it is 6%. So to XYZ. Okay, or we can make this as a CGST and SGST. So that would be easy for us. CGST and SGST. So now how it is going to be affecting our GL model, GL view. GL view. So how it's going to be affected in the sense transportation account, debited, to what is a transportation account debited? 1 lakh. Okay, transportation account debited 1 lakh. Input CGST at 6%. At 6% will become on 1 lakh. It will become 6,000. Same input IGST. Sorry, input SGST. 6%. 6,000 to trade payables account. To trade payables account 1,12,000. Okay, 1,12,000. So next one, same. I will write it. Second, loading charges account debited 50,000. Okay. Input CGST your input CGST 3,000. Three thousand to trade payables 56,000. Okay, 56,000. So here we have a cost center. We have a cost center here. So that is nothing but cost center belongs to transportation. And every cost center will have a business area. Sorry, cost center. Okay. And here LHY. LHYD. And every cost center will have a business area. Every cost center will have profit center. Sorry, not business area. Profit center. For example, L1000, and every segment, every profit center will have segment. For example, LCM. Okay, and here it is not a expenditure account, so we will not have any cost center. We will have business area, we will have profit center and segment. So LHYD, L1000, LCM. And here also we have business area, and from business area, cost center, profit center will be linked. Okay, L1100, for example. Okay, and here again we have a business area. Yeah, just write down. So till here it's a active splitting only. Till here it is active splitting only. On the base of entry, the splitting was taken place. Okay, I'm not keeping any arrow marks here. Hope you understood, right? So two lines: transportation account debited, input GST debited, input SGST debited. Okay. Two trade payables. First line. Second line, loading charges account debited, input CGST debited, input SGST debited, two trade payables. That is second line. Any question here?
No.
Okay. Till here, it's active splitting only. Okay, this is our invoice. Okay. So now, how after doing a payment, how it will be reflected? Entry view. Entry view. Okay. Vendor payment. Vendor payment. So on the base of on reference to invoice, we will do it, right? Okay. Reference to invoice. Reference to invoice. Okay. So here, how the splitting will take in place? Simple, it will take. So here we are not going to do any business area. Here it will take it as an XYZ, service limited, 1,68,000. To bank outgoing account. 1,68,000. Okay, so in GL view, how it's going to be affect in the sense, debit the receiver, in GL view, payment GL view, trade payables account, debited. Okay, so the entry would be divided into two lines, 1,12,000, 1,12,000, and it will take LHYD, L1000, L cement. Two, bank outgoing account, 1,12,000, LHYD, L cement. Same one more line item, trade payables. So same thing, it will be reflect. Okay, here amount will be changed. 56,000. Okay. So here automatically payment document number, whatever entry view we have given, okay, invoice, automatically that will picked in your payment document also. All your business area, we have not entered any business area or any profit center or any segment at the time of payment. Automatically it has picked from your invoice document or your material document. Here we don't have a material document. Okay, here we have an invoice document, FI document. From this, automatically it will pick. Clear? Any questions here? So this kind of splitting, we are going to call as a passive splitting. Active splitting, zero balance splitting, and passive splitting. Any questions anyone have?
No.
Okay.
Passive splitting useful for reversal payment.
Sorry.
Both. Passive splitting used for reversal both as well as payment as well. Right?
Payment. Any reference document, if splitting as happens, or any dependency document, as per dependency document, if splitting was taken place, then that is considered as a passive splitting. Zero balance splitting is nothing but if any debit and credits are not equal, then system automatically triggers the zero balance splitting method. And what do you mean when active splitting? Active splitting is nothing but however the user enters. Okay. The user entered transaction. According to that, if splitting taken place, then that splitting is known as an active splitting. Clear?
Okay.
Okay. So
in active splitting, this automatic reversal or reference document is not required, right?
sorry, automatic reversal document number is required, right?
No, in active splitting, I'm saying.
Active splitting, what you will do? You will do credit memo, right?
Yeah.
Right. A credit memo in the sense what you will do? You will enter all the details, either debit line or a credit line. You will give GL account number, you will give business area, you will give profit center. In one line, debit or credit line. Clear?
Okay. And the same document, if we use that same document for payment clearing or something, then it will fall into passive splitting.
Passive splitting.
Yeah. Okay. Got it.
So next one, we will see the configuration of document splitting. Write down. Write down document splitting. So the most important this thing, document splitting. Step number 1, classify GL accounts for document splitting. Classify GL accounts for document splitting. Write down the path. Write down the path. SPRO. SPRO. SAP reference IMG. SAP reference IMG. Financial accounting new. Financial accounting new. General ledger accounting new. Business transactions. Document splitting. Document splitting. Classify GL accounts. Classify GL accounts for document splitting. Classify GL accounts for document splitting. So once again, I'll show with the configuration system. SPRO, SAP reference IMG, SPRO, SAP reference IMG, financial accounting new, financial accounting new, financial accounting new, financial accounting new. Next one, general ledger accounting new, general ledger accounting new. Next, business transactions, business transactions, business transactions. Next, document splitting, document splitting. Classify GL accounts for document splitting. Classify GL accounts for document splitting. So here we don't have transaction codes for this because it's newly introduced one. Classify GL accounts for document splitting. Okay, so click on execute button. So give chart of account LOCA. Give our chart of accounts LOCA. Okay. Okay. Press new entries. Whether you remember or not, account groups we have created. Clear? So again, we need to mention here those account groups. Okay, account from and account to. Okay, so here, for example, 1 lakh 109999. So here SAP has, this is nothing but share capital. This is nothing but share capital account, right? We have divided in account groups, chart before, after chart of accounts, and SAP has given here item category. So we need to select the correct item category here. Okay, we have balance sheet account, vendor separate, customer separate, material separate, asset. So you can see here. So balance sheet, customer, vendor, right? So here we need to select, it's a balance sheet account. Next one, 1,10,000. So we have already defined 1,10,000. So here this is also related to balance sheet. So you can select here it as a balance sheet account. Balance sheet account. Next, okay. Next one we have given 1,20,000. 1,20,99. 1,29,000. Okay, reserves and surplus, asset. I'll select here it as an asset. 700 asset. Accumulated depreciation. Next one, 1,30,000. 1,30,99. 1,30,99. Balance sheet item. 1,40,000. 1,40,99. Okay, 1,40,49. Same balance sheet item. And here sundry creditors or vendors. So we have normal vendors and special GL vendors. Correct. So I'll split here. Normally we have given 1,50,000 to 1,50,999 vendor accounts. So here what I'll do, I'll give 1,50,000 to 1,50,499 to normal vendors. So here you can see here we have that vendor and special GL vendors. So here vendor account, vendor special GL transactions 3,000 0300 03100. So first set I'll give it as a vendor, and second set 1,50,500 to 1,50,999. I'll give it as a vendor special GL transactions. Vendor special GL transactions. Okay, we are doing the classification, normal vendor and vendor special GL. Next one, taxes. Taxes 1,60,000. 1,60,999. Okay. We have taxes on sales and or purchases. Tax on sales on purchases 5,100. Next one, we have 1,70,000. Sorry, 1,70,000 to 1,79,000 balance sheet items. If you don't remember, go and check your account groups what we have given. Okay, 0100. Next one, 1,80,000. 1,80,999. Same balance sheet items. Balance sheet accounts. Next one, liability series we have completed. Next one, assets. So we have created 2 lakhs to 2 lakhs. 2 lakhs to 2099. So this is asset. Asset is nothing but 07,000. 07,000. Okay. So 20, 2,10,000 to 2,19,000. Balance sheet 0100. 2,22,000. 2,20,000. Balance sheet items. Okay, 2,30,000 to 2,30,999. Material inventories. These are inventories. So we have a item category called material, I believe. Yeah, material 6,000. Just write it down till here. Just write it down till here.
Done now.
Done.
Yeah.
Okay. Next we can create 2,40,000. So we will give for cash and bank 2,40,000. We have created cash and bank accounts. So here we have cash account 4,000, 04,000. Cash accounts 2,40,000, 2,50,000. So debtors, some trade payables. So here we have a customers, right? Same normal customer, special GL customers. 2,50,000, 2,54,999, 2,54,999. So we have here you can see normal customer, special GL transactions. Normal customer 2,000, 2,55,000, 2,55,000. So same thing, special GL customers. Customer special GL transactions 02100. 2,54,999. Same thing, right? We have given 2,54,999, 2 lakhs. Yeah, here 1,9. Okay, next one 2,60,000, 2,60,000, 26,999. This is nothing but tax on sales and purchases. The same thing, tax receivables. So here we can select from here tax on sales and purchases. Next write down 2,70,000, 2,70,000, 2799, 2799. Balance sheet 01,000. Next one 2,80,000, 2,80,999. Balance sheet. Okay. Next one revenue items. Okay. 3 lakhs. One second, guys. 1 second. Here, write it down. Is it done, everyone?
Yes,
Hello?
no. Yeah, no, done.
Yeah, write down. Next series 3 lakhs. 309999. It's a revenue accounts. Okay, the revenue accounts is nothing but 3000 series 40,000. Okay, revenues. Next one 3 lakhs 10,000 to 3 lakhs 19,000. 31,999. Same 30,000 revenue. Next one 3 lakhs 20,000. 30,000. Next one 3 lakhs 33. 0000. 9999. 3,000. Oh, 40,000. It's again expenditure accounts. So 2,000. 2,000 is an expense account. 4 lakhs 10,000. 41,999. 2,000. Next one 4 lakhs 20,000. 4 lakhs 20,999. That could expense, right? 20,000. Next one 4 lakhs 30,000. 43,999. 1,1,1,0. Next one 4 lakhs 40,000. 44,999. 20,000. 4 lakhs 50,000. 4 lakhs 60,000. Just write it down. That's it. So we have created liabilities accounts, assets, expenses, and revenues. So earlier we have created the account groups for classic GL accounts. Now we have created for new GL accounting. Once you are done, let me know.
Done, okay.
Okay, how about others? Okay. If again I'm telling you, if this here, if we are not assigning correct item category, then the splitting will not work properly. Okay. So that's a very important point. This is, if you are not right on. Next step, classify document types for document splitting. Next step, classify document types. Classify document types for document splitting. Classify document types for document splitting. Okay, path same as above. Path same as above. What is our group? Lahari, right?
Yes, ma'am.
Yeah. So write down classify document types for document splitting. Classify document types for document splitting. Path same as above. Path same as above. Path same as above. Till document splitting. Till document splitting. From there select. Okay. From there select classify document types for document splitting. Okay. As I said yesterday, like there are total 58 document types for all modules in SAP, right? So we don't do any sort of configuration. We follow whatever document types SAP has provided. So write down a note under that. Write down a note under that. Write down a note under that. No configuration changes. No configuration changes are required. No configuration changes are required. No configuration changes are required for 58 required for 58 standard SAP document types. Changes are required. Changes are required only for user-defined document types. User-defined document types. So 99.99% clients will follow only these 58 document types, what SAP standard provided. Clear? And in case if anyone wants one or two document types, right? Again, I'm telling you 0.01% clients may ask, but not 99 point across the globe. All the companies, all the clients will follow only the SAP standard provided document types. So that's the reason we don't do any configuration. Whatever is there in SAP, we will follow that. Clear? Any questions? Any questions?
Navin, what do you mean by user-defined
Sorry?
document types? What do you mean by user-defined document type?
User-defined, for example, AB document type is there, but user want LB for reversal document type according to his company code. Instead of following standard document type, he want to have his own defined document. For example, customized one, we call it as an, for example, now majority out of whatever SAP partners are there, in that Apple is also one of the partner of SAP. They are using SAP in their updates, whatever updates are there, right? Majority, 99%, whatever they follow, they want own customized one. They have their own requirements. For example, they are using only 5 different document types, but they don't want to use SAP standard provided one. They want to customize their document types according to their requirement. Means instead of AB, they want to go for AP or SP, something like that, which is not there in the system. That is called user-defined document types.
Okay, Navin. Got it.
Is this clear?
Yeah.
Any questions on this?
No, Navin.
Okay, next one. So we have already saw this. So for example, if you want to see, you can see here document types. See here, it is already provided. A1, it's probably someone has want to define. So 59 it is showing, and remaining all are standard one. You can see here. Clear? Okay. Next one. So we have already saw in our classic GL the same thing. Next one. Zero balance. Next one, write down define zero balance clearing account. Write down, define zero balance clearing account. It's a two-step activity. It's a two-step activity. It's a two-step activity. First one, we need to create zero balance clearing account. We need to create zero balance clearing account. Okay. And second step, we need to assign zero balance clearing account. Okay. So write down first step, create zero balance clearing account. Create zero balance clearing account. Full stop. GL creation is a master data. Not a configuration. This is not a configuration. It's a master data. Clear? So here write down the path. Again, we are going to create. We will see what is this complete path. Okay, write down path. SAP Easy Access. SAP Easy Access. Accounting. Financial accounting. General ledger. Master records. Okay. Master records. GL accounts. Okay. GL accounts. Individual processing. Next, centrally. Transaction code FS00. See, again, why I'm using this. It's not a configuration step. It's a master data. So all the master data will be created under end user's screen, not under configuration screen. So we need to go to end user's screen. So write down the path, whatever path. So here, SAP Easy Access. Okay, SAP Easy Access. There's nothing but SAP Easy Access. Okay, so click on SAP menu. Accounting. Financial accounting. Okay, financial accounting. General ledger. Under that, master records. Okay, we have a GL accounts and profit centers. So first we need to create one GL account. So we will discuss in-depth GL account creation when we start with the GL module. So individual processing. So here we have a three options: centrally, in chart of accounts, in company code. So I'll explain these three in depth when we start our GL masters. So just now we need to create one account, only one account. So that's the reason we are going here. So FS00. Okay. So here, this is the GL account screen. So here I will create. So 1,79,000. 1,79,000. Okay, for zero balance ledger account. Company code LI01. So here three options are there. In this, we are supposed to create. Don't worry if you won't understand here, because we are going to explain each and every button when we start our GL. So click on create. So it's nothing but balance sheet item, and it's a current liability. So liabilities L170. Current liabilities, balance sheet item. So zero balance zero balance clearing account. Clearing account. Just write it down. Zero balance. So it's a current liability and it is a balance sheet account. So zero balance account. And we have another tab, control data. Click on control data. So don't just, whatever I'll say, just follow here. So open item management, line item display, select check boxes for only balance in local currency, open item management, line item display, sort key 001. So it's INR. Sort key 001. Only balance in, I'll explain each and every point. Okay. Only balance in local currency, open item management, line item display, sort key 001. Next one, create bank interest tab. Create bank interest tab. Okay. So here, okay, create bank interest and it's a balance sheet item. So we have already created field status groups, right? So balance sheet item. See, what is zero balance ledger account? What is zero balance splitting? What is zero balance splitting?
If there is any discrepancy.
So it should be automatically trigger when there is a difference between debit and credit, correct? So that's the reason we need to select here for those accounts where it need to be trigger automatically. Those accounts we will select post automatically only. Post automatically, it's a balance sheet item. So we have selected field status group as an L001. Last time we have created. Okay. And post automatically option. So write down this. And click on save button. Okay. So we are not going to post any entry to this GL account. It automatically trigger when there is a difference between debit and credit or credit and debit. Okay. So here we need to check mandatory this one. Post automatically. So what we need to do, we need to copy this GL account to other company codes also. So what is my other company? What are other company codes? LI02. And what is other one?
LU01.
LU01. So I'll copy this. And here we have create and here we have copy option with the template. So here we will give GL account number and our target is LI02 and what is my source company code? LI01. LI01. So what happens? All the attributes which we have created under LI01 for this particular account will be copied to LI02 company code. So click on OK button. That's it. And click on save. So for LI02 company code, all the attributes with the GL account has been created. Okay. So next one, I would like to copy to LU01 also. LU01. Okay. Now select again with template. So here the GL account is 1,79,000. Copy company code is LI01. So something and click on OK button. So all the attributes will be copied to LU01 also. Zero balance clearing account, right? Control data, You can see only balance in local currency, open item management, line item display, 001, create bank interest. So click on save button. So we have created zero balance ledger account for all the three company codes. One company code we have created and we have extended to other two company codes. Okay, any questions?
No question.
Okay, next one, assign zero balance clearing account. Next step, we have defined, we have created zero balance. Next one, assign zero balance ledger account. Write down, define zero balance clearing account. Path SPRO, path SPRO, SAP reference IMG, financial accounting new, financial accounting new, general ledger accounting new, general ledger accounting new, business transactions, business transactions, document splitting, document splitting, define zero balance clearing account. You remember the number, right? 1,79,000. Okay, define zero balance clearing account. So this is zero clearing account. Okay. Okay. So here zero balance posting. So SAP has written already. So this is a standard item category. This is related to zero balance. Okay. This is a standard setting. Clear? See here, you can see here. So balance sheet, zero balance. Okay. So next, write down. So here select account keys, debit posting key 40 and credit posting key 50 for zero balance. And what are my zero balance account? So double click on accounts, select 000, select 000 and click on accounts. Okay, what is my chart of account? What are my chart of accounts? Okay, LOCA, LOCA. Okay, press new entries, press new entries, press new entries, and give your GL account number 1,79,000, whatever we have created. Whatever we have created, give that account number. Okay, so that it will be automatically triggered. So click on. Okay, item category is 1001, chart of account is LOCA, account case is 000, and GL account number is 1,79,000. So this is a combination where it will trigger automatically. Okay.
Okay.
Next one. Define document characteristics. Define document splitting characteristics for general ledger accounting. Define document splitting characteristics for general ledger accounting. Define document splitting characteristics for general ledger accounting. Okay, path same as above. Path same as above. Till document splitting. Path same as above till document splitting. And from there select define document splitting. Define document splitting characteristics for general ledger accounting. Define document splitting characteristics for general ledger accounting. So write down this CRAN as it is. Okay, write down this screen as it is. I need to check zero balance ledger at business area level, profit center level, and at segment level. And same time, I want in this partners field should be mandatory. That is, business area is mandatory, profit center is mandatory. And from profit center, here, see, we need to make this as a mandatory fields. Okay. And from there, it has to be trigger. Segment has to be triggered from profit center. So make this as it is. Okay. And we need to make business area mandatory and profit center. Okay. In field status level, we made business area and profit center optional, but here we are making them as a mandatory, either debit or credit. Okay. Fine. Just write down as it is the screen. Okay. Click on save button. Click on save button. So nothing. Okay. Are you sure you want to save these changes? Yes. Okay. So just click on save button. That's it. Done, everyone, the screen?
Yes, Mohan.
Yeah. Next one. Next one, define characteristics. Define document splitting characteristics for controlling module. Define document splitting controlling module. Path same as above. Path same as above. Path same as above. Till document splitting. Till document splitting. And from there, define document splitting characteristics for controlling. Define document splittings for controlling. We won't do anything over here. Just we will see what exactly it will be there. So it's nothing but order. Say order, internal order, sales order, cost center, cost object, profit center, segment. Okay. So nothing we won't do. This is nothing for controlling module. So just check these things are activated or not in your system. It will be there. Okay. So press save button. And so this will come under CO module. Okay. Internal order, sales order, cost center, cost object. The most important last step, activate document splitting. Activate document splitting. Path same as above. Path same as above. Till document splitting. Path same as above. Till document splitting. And from there select. So this is very important step. Activate document splitting. Activate document splitting. So here, click on activate document splitting. See, document splitting will be at which level? Client level. See, this is called, if you are unchecking, right? Then which means that it is not activated. If it is checked, which means that it will be activated. The document splitting is activated. You remember yesterday's session, I said 00001 splitting method will be copied, debit to credit. All the rules and regulations will be written in this. How to copy from debit to credit or credit to debit. Clear? So here activation of document splitting at client level. So whenever we select this checkbox, then what does it mean? It will be activated to all company codes under client 800. Clear? And if we want to deactivate any company code, then we need to click on deactivation button. Okay. Under what company code? For example, our company code is LU01. I don't want to deactivate, but I would like to show you. Okay. So here we need to check here. See here, we need to make this as an inactive. Then the document splitting will not work for this. So we have a 3 company codes, LI01, LI02 and LU01. But I don't want LI01 I want to activate and LI02 I want to activate, but LU01 I don't want to activate. Then we can check, uncheck this. But I want to use this. So this is splitting method. Clear everyone? Any questions here? Any questions? Without this document splitting activation, the debit, the business area from debit to credit, credit to debit will not going to be happened. Yes, no.
Yes, got it.
Yeah. So with this, we have done the configuration steps, and next week we will see with the master data, profit center standard hierarchy along with the GL module. Clear? Just practice it. If at all any questions, let me know in next week's session. I'll share the recording yesterday's and today's. Clear everyone? Any questions before we'll call it for today?
Nothing from my end.
Yeah, thank you all.
Thank you.
Okay, Naveen,
Thank
thank you. Bye.